Thinking about buying a home, but totally confused about the mortgage process? Don't worry, we've all been there, and it's not nearly as complicated as it seems. From choosing the right lender to navigating paperwork and everything in between, we've got you covered. Stay tuned to the end, and we'll make sure that we answer all your questions. Welcome back to Living in Spokane, Washington. If you're new here, my name is Hunter McKay, and I'm your local real estate broker. Whether you're considering moving to the area or just want to make sure you're prepared for your next stage of homeownership, we're here to answer all of your questions. Please make sure to reach out, send us a message, or drop a comment, and I'll get in touch with you as soon as I can to make sure that you're totally covered. To break down the lending process in 4 basic steps, I know it seems more complicated, but there really are only 4. You have the initial application, the disclosure of your loan terms, underwriting, and then your final closing disclosures. We're going to go over all of them today. There are 4 types of major lending institutions: banks, credit unions, mortgage brokers, and online lenders. Online lenders might not exactly be its own category, but I really think it's important to designate them separately. They are specifically mortgage brokers, more often than not, but they are an online variety, hidden from your real world and unable for anyone to help you should something go wrong, because frankly, they're in like Tallahassee somewhere, and it's expensive to fly and find the person responsible for having screwed up your life. And so please, don't use the online lenders. No one likes it. The sellers don't like receiving pre-approval letters from it, and all of the real estate brokers know, well, they could be lying. Something might go wrong because it's an online lender. The rates look really good, and certain circumstances, if you are an A-paper borrower with great credit and no hassle or weird stuff in the background, maybe an online lender can pull it off. But again, maybe is the operative word there. I really like working with mortgage brokers. Mortgage brokers, their whole unanimous job is to originate loans. And so they've gotten really good at it because it's all they do day in and day out. It's important to make sure you work with the right mortgage broker because they have access to a number of different lending lines. They place money for the cheapest amount possible. That way they can get you the greatest rates. So they tend to be the best deals. Some people don't like them because they would prefer to work with the bank that they've always banked with. This tends to be an older generation that works with STCU or Numerica, and they remember going in and being treated really well by the teller. They go, well, they know my name, and they have my mortgage for my boat, and they have my car, and they did that personal loan for my grandson that one time. Unfortunately, by factor of banks being capable of doing all of those different things, they're not always the best answer for a mortgage loan. It can be more complicated. They might have different underwriting standards, and they might require more of you than a mortgage broker. And let's face it, if we're buying a home, do we really want someone to need more for the same outcome? No, we want to do less for the best outcome, right? That's why I pick a mortgage broker. The 4th option is a credit union. I tend to think that credit unions and banks operate pretty similarly to each other, but a bank usually is going to sell the loan on a secondary market, so they will behave more similarly to a mortgage broker, but I would anticipate that they'll have higher fees or origination points that might not exist on the mortgage brokerage side. The credit union could be very similar, but a credit union might have very unique products. They have what's called portfolio loans, and they choose to keep the loan in-house for a durable period of time. And what this means is that they don't have to follow national guidelines. They could literally issue you a loan completely because they want to. Now, they'll have underwriting standards, and they might be really complicated, but if they're complicated and unique and they fit for your circumstance, then a credit union could be really wonderful. But for most people that are buying a standard first-time homebuyer home or their step-up home, you want the cheapest mortgage product available for the cheapest rate and the cheapest amount of fees, and that's going to come from a mortgage broker. I'm pre-qualified. That's enough, right? Wrong. A pre-qual letter is what you get from Rocket Mortgage or Quicken Loans, one of those online lenders. You just put in a couple of pieces of information, limited checks are done, and they just send you a pre-qual letter. Congrats, you're approved up to $400,000. But what if you were wrong? What if you misjudged your income? What if you put in the wrong figure? What if you haven't considered debt obligations? What if there's an underwriting standard that you're unaware of? All of these things could come back to bite you. And so a pre-qual letter just means info was put into an application, The application did a basic math and said, yep, you are approved at this number. Unfortunately, you need a real human to underwrite that and see if all of those details are really accurate. Once the underwriting happens, then you can get a pre-approval letter, which means we've already looked at you, the person. We've looked at your credit, your income history, and all of your debt obligations. And we have determined that as long as you buy an acceptable home inside this price point, you will be approved. That is a much stronger piece of paper that indicates you have done the work and a seller should want to work with you, because the only thing outstanding is an appraisal on the home. And that is a much stronger position than saying, well, I typed in some figures to an online calculator and it said you're good to go. You can see the difference, right? Which do you want to be? One thing that I haven't talked about on how to pick your best loan officer, do you have their cell phone number? You always need your lender's cell phone number. Nothing good happens between 9 to 5 in real estate. That's when everything is kosher and everything is working. You want to know when shit really hits the fan? 5:30 p.m. on a Friday. And no banker is available 5:30 p.m. on a Friday. So just whoever lender you pick, make sure you have access to their cell phone and that they're willing to take your call on a weekend, because that's when you're going to need them. If you're working with a lender and they say, don't worry, you don't need my cell phone. I'm always at my desk. I'll be available. We can handle everything Monday through Friday, 9 to 5. It would be my recommendation that you shop lenders, because if something bad happens and you can't get quick answers, seller may make a different choice. Someone else might outbid you. You need to have quick access to really good information, and you need it whenever it's due. And sometimes it's due at 6 p.m. on a Sunday. And so if your lender isn't able or available to help you, that can really impact you. Let's talk about the application process. It's actually really straightforward. Most lenders are going to have an online application for you to fill out. They want you to put in your debt obligations, your income, your tax history, and they're going to have a document upload for you to work through. You really want to have a few things ready to go right away. Your first 2 years of tax returns, whatever the last 2 years that are filed. And if you haven't filed taxes recently, that can be a problem. There are loan options available, but if you want the best loan price, you want to fulfill as many document requests as possible. So 2 years of tax returns, 60 days of bank statements, and 60 days of work history income. That's either your pay stubs or your W-2, or however you make money. It's important to just show it that way. The easy way to think about this is it's just your 222. Your 2 years tax returns, your last 2 months bank statements, and your last 2 months pay stubs. Because let's face it, you're asking for a lot of money and the lender wants to know, how are you going to pay it back? It's pretty simple. After you've submitted that initial application and you've given the lender all of your supporting documents, then they're going to submit everything to underwriting. And underwriting is where a third party double checks the lender's work to make sure that everything that you gave them is true and accurate, and that no one has missed any of the details. They're going to go through the loan product that you've chosen and the loan disclosures that your lender has provided, and then they're going to compare against the information that's been provided from those documents. If you've given them all of the necessary information, probably what happens next is you get your first pre-approval. It might be a pre-approval with conditions. That means the underwriter has come back and said, yes, I agree with everything that's been submitted, but I have these additional questions. And those questions can be anything from, I found out this piece of information in your tax history. Can you give me more info about it? Or it looks like you might have a cosigner and they haven't provided all of the documents. Sometimes people don't add in all the right documents, or they have the wrong date ranges, and the underwriter will catch that and say, I need updated documents in these areas. Please be aware that if an underwriter gives you an assignment, your whole life has frozen. Nothing is moving forward until you fulfill in those documents. Your lender can't do anything. Your realtor can't do anything. The underwriter doesn't want to do anything until you have fulfilled that homework assignment. So if you get pre-approved with conditions, that's balloons. That is such a great moment. But please, for the love of God, move quickly to resolve those conditions, because they are important. And timing is a very key factor. So I know it's a struggle. By this point, you'll be packed, you'll be ready to move, you'll be excited and probably have already purchased your home, and you won't want to do the homework. Please go do the homework. It's not as hard as it seems. There are any number of issues that can come up during underwriting. Most of them are derived from either the lender making a mistake or the buyer providing incorrect information. And then the underwriter locates it and says, hey, there's something wrong here. As long as the math is appropriate, we have the debt-to-income ratio right, and the appraised property value is correct, then usually we can resolve any of the issues. But it's very important that you are honest up front. Many of my clients have intentionally hidden things because they thought, I can get one over on the underwriter. The one that immediately comes to mind is a client who said, I do not own any other property. He owned a condo in Germany, and it cost him $5,000 a month. His debt to income was completely out of whack. He had lied about this piece of property because he thought no one will find it because it's in a different country. Unfortunately, there are ways that the underwriter can prove that you own other property in other countries. And so just be honest up front, because if you aren't honest, those are the biggest issues that are going to come up during underwriting. And then it's up to everyone else to repivot and figure out new solutions, when if we had just been honest up front about what we're dealing with, almost anything is workable as long as we know what the details are that we're going in with. Conditional approval is what we talked about earlier. You get a pre-approval letter and the underwriter says, yes, but I still need you to fulfill on these obligations. Once you have that, you need to go and do that homework very quickly. Usually it's the final stages of maybe you just need updated bank statements, maybe you're missing a pay stub, maybe you need to write a letter of explanation stating why this address is popping up on a loss report. Any number of things can come up, but letters of explanation are most notably the things that are being done the final week of closing. The underwriter looks at your life and notices some details, and the lender needs to fulfill an obligation by putting a note in the file that says, this is what that detail is. And that's just you writing on a piece of paper, well, that detail is this part of my life, and here's how this fits into the thing. Be honest, and the lender can help you write those letters of explanation and make sure that you get to final approval. As soon as all of your conditions are in and the appraisal is complete, the underwriter will go through one final pass and you will get final approval. Once you have final approval, they immediately move to getting your closing disclosures out to make sure that the interest rate is still locked in, that you're okay with the payment, that the taxes and interest have been calculated effectively. There is sometimes a small difference between the initial disclosure and the closing disclosures because the numbers might shift. Maybe the purchase price changed over the escrow period, maybe the insurance was different, maybe the taxes were estimated wrong, but the amount of change should be pretty minimal. And so if there's a massive difference between your conditional approval number and your initial approval number, make sure to ask your lender and real estate broker why that happened and get a really clear understanding of what changed. Did you make a mistake? Did they make a mistake? And who's really accountable for that? Once your closing disclosures are out and you're happy with the way they look, we are 3 days away from closing, as long as the seller is prepared to close too. Once the CD is out, CD stands for closing disclosures, it starts the 72-hour review period. After that third day, you are permitted to go in and sign your loan docs. Usually, the lender will coordinate this release of closing disclosures at the end of your escrow. That way, we're approaching closing timeline. At the closing time, you will bring in your final cash to close, and you will sign your final mortgage documents, always with the closing agent or with the title company. These are all done with wet signings, and you have to be in person, or if you are out of the country, you have to make sure that you have assigned a personal representative to come and sign for you, and that all of the legal documents are taken care of up front. This can be very important for traveling people or people in the military, and we can always help you through those extra details. So if you're worried about that, don't worry, we have you covered. That's a wrap on our deep dive into the lending process. Remember, understanding each step of the process and making sure that you have a lending professional that's on your side and working in your best interest can be imperative to making sure that this is a success for you. If you have any questions or feel that you need more personalized advice, don't hesitate to reach out. I would love to schedule a meeting with you and make sure that you feel really comfortable moving into your first home. Thanks for watching, and don't forget to like or comment and leave us a message for how we can be more help next time.